Something happened on January 11th that should terrify anyone holding dollars in a bank account, a retirement fund, or anywhere else they think is safe. The Department of Justice served the Federal Reserve with grand jury subpoenas and opened a criminal investigation into Jerome Powell, the chairman of the Federal Reserve. Not a political dispute, not a congressional hearing, a criminal investigation with the threat of indictment hanging over the head of the person who controls the value of every dollar you own. Let me be very clear about what just happened because the mainstream media is treating this like just another Washington political fight. And it's not. In 110 years of Federal Reserve history, no sitting chairman has ever been under criminal investigation. Not during the Great Depression, not during the stagflation of the 1970s, not during the 2008 financial crisis. This is the first time the institution that backs your currency is being criminally investigated while it's supposed to be managing that currency. Think about what that means for your money. Every dollar in your wallet, every dollar in your checking account, every dollar in your 401 kilobits is backed by an institution whose leader is facing potential criminal charges. The Federal Reserve doesn't produce anything. It doesn't have gold in the basement backing your dollars anymore. The only thing backing the dollar is trust in the institution, and that trust just took a bullet to the head. The markets understood this immediately, even if most Americans haven't figured it out yet. Gold blasted through $5,100 per ounce and hit a record high of $5,136 on January 27th. Silver rocketed to an all-time high of $117 per ounce. The dollar index dropped to 4-year lows, and Treasury bond investors are now bracing for higher yields because when trust in the Fed collapses, the interest rate demanded to hold U.S. government debt goes up. Now, the official story is that this investigation is about a building renovation. The Fed spent $2.5 billion renovating its headquarters, and Powell allegedly gave misleading testimony to Congress about luxury features in that project. Representative Anna Paulina Luna referred Powell to the Justice Department back in July for potential perjury. And now, 6 months later, Justice Powell's term as chairman is set to end in May. The DOJ decides to open a criminal investigation. Does that sound like normal oversight to you, or does it sound like political weaponization of the justice system? Because here's the thing. I don't care which side you're on politically. What just happened should concern you deeply. When the justice system gets weaponized against the central bank, every person holding that central bank's currency becomes collateral damage. Your savings don't care about your politics. They care about whether the institution backing them has credibility. And right now, that credibility is evaporating in real time. The Guardian newspaper ran a headline on January 16th that said the dollar is losing credibility. Why central banks are scrambling for gold. Central banks around the world are dumping dollars and buying gold at a pace not seen since the 1970s. These are the institutions that used to prop up the dollar system. They're abandoning ship. Let me take you back to the 1970s because this isn't the first time we've seen political interference destroy Fed credibility and wreck the dollar. From 1970 to 1974, President Richard Nixon relentlessly pressured Federal Reserve Chairman Arthur Burns to keep interest rates low and print money to juice the economy. Nixon wanted to get re-elected, and he didn't care what it did to the currency. Burns caved to the pressure. He kept rates too low for too long, and inflation exploded from under 5% to over 11% by 1974. The dollar got crushed. Gold went from $35 an ounce in 1970 to $850 by January of 1980. People who held physical gold preserved their wealth. People who trusted the dollar and kept their savings in cash or bonds got destroyed by inflation. The purchasing power of the dollar dropped by more than half during that decade. That's what happens when political pressure compromises Federal Reserve independence. But here's the critical difference between then and now. Nixon pressured Burns politically. He used the bully pulpit. He threatened, he cajoled, he twisted arms, but he didn't criminalize the Fed chairman. He didn't threaten him with indictment and prison. The institution itself maintained some level of credibility even though the policy was terrible. Today, we've crossed a line that has never been crossed before. The DOJ isn't just applying political pressure. They're threatening criminal charges. They're treating monetary policy decisions as potential crimes. And that fundamentally changes the equation because once you criminalize the institution, you destroy whatever credibility it had left. Think about it from a global investor's perspective. You're sitting in Beijing, or Tokyo, or Frankfurt, and you're watching the United States Justice Department criminally investigate the chairman of the Federal Reserve. What does that tell you about the stability of the dollar? What does that tell you about America's commitment to rule of law versus political vendettas? What does that tell you about whether your Treasury bond holdings are safe? It tells you to get out. And that's exactly what's happening. The dollar index, which measures the dollar's value against other major currencies, has dropped to its lowest level in nearly 4 years. As of late January, analysts are predicting the dollar could decline another 8% through mid-2026. Morgan Stanley is forecasting continued dollar weakness through the first half of the year. The currency that has been the world's reserve for 80 years is losing that status in front of our eyes. And when a reserve currency loses credibility, there's only one place global capital goes. It goes to gold. It goes to silver. It goes to physical assets that can't be printed, can't be devalued by political decree, and can't be seized by governments looking for scapegoats. This is why gold and silver are making vertical moves right now. This isn't just normal market volatility. This is a trust collapse. When institutions fail, tangible assets become the only anchor. Gold doesn't care who's Fed chairman. Silver doesn't care whether Jerome Powell gets indicted. Physical metal in your possession is wealth that exists independent of any political system or legal jurisdiction. Let me explain what's really at stake here, because this goes way beyond Jerome Powell or one building renovation scandal. The Federal Reserve is the foundation of the entire dollar system. Every bank in America operates on the assumption that the Fed is a credible lender of last resort. Every pension fund, every insurance company, every retirement account operates on the assumption that dollar-denominated assets will hold value over time. When you criminalize the Fed chairman, you're putting a crack in that foundation. And once the crack starts, it spreads fast. Banks start questioning whether they should hold so many treasuries. Pension funds start hedging with alternatives. Insurance companies start diversifying out of dollar assets. The whole system that depends on faith in the institution starts to wobble. This is what the bond market is already pricing in. Reuters reported on January 15th that U.S. bond investors are bracing for higher long-term yields as the Powell investigation has fueled concerns about Federal Reserve independence. Translation: investors now demand a higher interest rate to lend money to the U.S. government because they're less confident the Fed can maintain stability. That higher interest rate means the government pays more to service its debt, which means more money printing, which means more inflation, which means your dollars buy less. See how the cascade works. Political interference destroys Fed credibility. Lost credibility raises borrowing costs. Higher borrowing costs require more money printing. More money printing devalues the currency. Devalued currency pushes people into gold and silver. And the people who figure this out early protect their wealth. The people who figure it out late pay the price. Now I want to address something Powell said in his statement on January 11th when he disclosed the investigation. He said, "The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the American economy rather than on the preferences of political actors." That's a remarkable admission. Powell is essentially saying he's being criminally investigated because he won't do what politicians want with monetary policy, whether you believe him or not. The implication is staggering. If Fed chairs can be criminally investigated for policy decisions politicians don't like, then the Fed is no longer independent. It's a political tool. And the moment the Fed becomes a political tool, the dollar becomes a political currency. And political currencies don't maintain reserve status. They don't inspire global confidence. They get replaced. This is exactly what happened to the British pound after World War II. Britain politicized its monetary system to fund social programs and maintain an empire it could no longer afford. The pound lost its reserve status to the dollar. British citizens saw their savings devalue. Their standard of living declined. The transition from reserve currency to secondary currency is brutal for everyone holding that currency. And now we're watching the same movie play out with the dollar, just on a faster timeline. The investigation was announced on January 11th. By January 27th, gold and silver were at all-time highs, and the dollar was at 4-year lows. In 2 weeks, global markets repriced the credibility of the U.S. monetary system. That's how fast trust can collapse in the modern financial world. Jerome Powell's term as Fed chairman ends on May 15, 2026. That's less than 4 months away. President Trump is expected to name his replacement soon, with candidates including BlackRock's Rick Weider, former Fed Governor Kevin Warsh, current Fed Governor Christopher Waller, and National Economic Council Director Kevin Hassett. Whoever gets that job inherits an institution under criminal investigation, with credibility at multi-decade lows. Do you think that new chairman is going to have the independence to fight inflation, if it means raising rates and crashing the stock market? Or do you think that chairman is going to remember what happened to Powell when he didn't follow political preferences? The precedent has been set. Monetary policy is now subject to criminal investigation. That changes everything. And this isn't just me saying this. International central bankers issued a joint statement on January 13th, expressing solidarity with Powell and concern about Fed independence. The European Central Bank, the Bank of England, the Swiss National Bank, and others signed on. These are Powell's peers from other countries saying publicly that they're worried about what's happening. When was the last time you saw international central bankers issue a solidarity statement for a US Fed chair? It doesn't happen. The fact that it happened now tells you how serious this is. The bond market is voting with real money. Equity markets might be ignoring this for now, but bond investors who are supposed to hold treasuries for decades are recalculating their risk. If the Fed loses independence and becomes politicized, then US Treasuries stop being the risk-free asset they've been for generations. They become political risk assets, and political risk assets demand higher yields. This is why I keep coming back to physical gold and silver. When institutional trust collapses, when currencies lose credibility, when political systems weaponize justice against central banks, tangible assets are the only things that hold value. You can't indict gold. You can't criminalize silver. Physical metal in your possession exists outside the system that's currently eating itself. And before you think this is hyperbole, look at what's actually happening in markets. Gold is up 64% in 2025, its biggest annual gain since 1979. Silver is up over 55% so far in 2026. These aren't normal moves. These are panic moves. These are smart money, institutional money, central bank money fleeing the dollar system and going to the only assets that don't depend on political stability. The premium investors are paying for physical metal over paper prices, tells you everything you need to know about trust. In some markets, physical gold is trading at $500 per ounce premiums over futures prices. Physical silver is virtually impossible to find at spot price from dealers. When you can get it, you're paying $10 to $20 per ounce over the paper price. That spread is the market screaming that paper promises aren't trusted anymore. Think about what your dollars actually are. They're a promise from the US government, backed by the credibility of the Federal Reserve. That's it. There's no gold in a vault with your name on it. There's no asset securing your currency. It's pure faith in an institution. And that institution is now under criminal investigation with its chairman potentially facing indictment. How much faith do you have in that? How comfortable are you betting your retirement, your savings, your family's financial security on an institution being criminally investigated? Because that's what you're doing every day. You keep your wealth in dollars and dollar-denominated assets. This isn't about whether Jerome Powell is guilty or innocent of whatever they're accusing him of. I don't know if he lied about building renovations, and I don't particularly care. What I care about is that the precedent has been set. The Fed chairman can be criminally investigated. Federal Reserve independence, which every economics textbook says is essential for sound monetary policy, is now optional. And when it becomes optional, it ceases to exist. Arthur Burns learned this in the 1970s. He thought he could manage political pressure and still do his job. He was wrong. Inflation exploded, the dollar collapsed, and gold shot from $35 to $850 in a decade. The people who saw it coming and bought physical gold early preserved their wealth. The people who trusted the system and kept their savings in dollars lost more than half their purchasing power. We're watching the same pattern play out again, but this time it's happening faster, because information moves faster and capital moves faster. It took a decade in the 1970s for the dollar crisis to fully unfold. This time, we're seeing gold and silver make 1970s-style moves in a matter of months. The trust collapse is accelerating because everyone can see what's happening in real time. The Guardian article I mentioned earlier quoted an investor saying, "Investors, private and sovereign, believe their strategic reserves are no longer safe in dollar terms, as they can be confiscated overnight." Think about that. This isn't some conspiracy theorist on the internet. This is a mainstream newspaper quoting mainstream investors saying that dollar holdings can be confiscated. That's the level of trust erosion we're dealing with. And it's not just international investors. American citizens are waking up too. Gold and silver dealer websites are reporting record traffic. Physical metal sales are surging. Premiums are expanding because demand is overwhelming supply. People who never thought twice about the dollar are suddenly Googling how to buy gold, and is my money safe? This is the early stage of a trust collapse. It starts with sophisticated investors and central banks. Then it spreads to wealthy individuals. Then it hits the mainstream. By the time everyone understands what's happening, physical metal is either unavailable or trading at prices that put it out of reach for average people. The window to protect yourself at reasonable prices is right now, not later. Let me walk you through what could happen over the next few months. Powell's term ends May 15th. Sometime before then, Trump will nominate his replacement. That person will face Senate confirmation hearings where senators will ask questions about the criminal investigation, about Fed independence, about whether the new chairman will bow to political pressure. The whole ugly process will play out in public view, further undermining what little credibility the institution has left. Meanwhile, inflation is still running hot. The economy is slowing down, but prices aren't. The Fed is stuck between needing to raise rates to fight inflation and needing to cut rates to avoid recession. It's the exact same stagflation trap Burns fell into in the 1970s. Except this time, the Fed chair is facing potential criminal charges, which gives him even less room to maneuver. In that environment, what do you think happens to the dollar? What do you think happens to Treasury yields? What do you think happens to gold and silver prices? The trajectory is clear. The dollar weakens further. Yields spike because investors demand higher compensation for risk. And precious metals continue their vertical ascent because they're the only assets that don't depend on political stability or institutional credibility. You could wait and see how it plays out. You could hope that somehow the Fed regains credibility, the dollar stabilizes, and everything goes back to normal. But ask yourself, when in history has a currency survived the criminalization of its central bank? When in history has a reserve currency maintained its status after its credibility collapsed on the global stage? The British pound didn't survive it. The German mark didn't survive it. The Roman denarius didn't survive it. History is littered with currencies that lost credibility and never got it back. The people who saw it coming and moved into tangible assets early preserved their wealth. The people who waited lost everything. Now, I'm not saying the dollar is going to zero tomorrow or next month. Complex systems don't collapse instantly. They deteriorate, then stabilize, then deteriorate more. The process can take years, but the direction is clear, and the time to position yourself for that reality is before everyone else figures it out. Physical gold and silver are the simplest, most time-tested way to protect wealth during currency crises. You're not speculating on some new technology or hoping a company performs well. You're holding a tangible asset that has preserved wealth for thousands of years, across every political system, every economic crisis, every currency collapse in human history. Gold hit $5,136 per ounce on January 27th. Silver hit $117. Those are record highs, and they're telling you something important. They're telling you that smart money, the kind of money that moves markets, has already made its decision about the dollar's future. The question is whether you're going to pay attention to that signal or wait until it's too late. When I talk about physical gold and silver, I mean real metal that you can hold in your hand or store in a private vault under your control. Not shares in an ETF, not paper gold on a brokerage statement, not a futures contract. Physical metal that exists independent of any financial institution, any political decision, any legal jurisdiction. Because if the Fed can be criminally investigated, if the dollar can lose reserve status, if institutions that were supposed to be independent can be politicized, then anything stored in the financial system is vulnerable. Physical metal stored outside that system is the only thing that can't be touched by political winds. The premiums you're paying today for physical metal are nothing compared to what they could be in 6 months, or a year if this situation continues to deteriorate. Right now, you can still find silver with premiums of $10 to $20 over spot. You can still find gold with premiums of a few percent. But if the Fed situation worsens, if Powell actually gets indicted, if the dollar crisis accelerates, those premiums could explode to levels that make metal unaffordable for average people. This isn't fear-mongering. This is pattern recognition. We've seen this movie before in the 1970s. We've seen it in other countries. We've seen it throughout history. Currency crises follow a predictable pattern. Institutional credibility collapses. Political interference increases. Smart money flees to tangible assets. Premiums on physical metals spike by the time the mainstream figures it out. It's too late to protect yourself at reasonable prices. The criminal investigation of Jerome Powell is the institutional credibility collapse. It's the crack in the foundation. Everything that follows is predictable from that starting point. The dollar will weaken. Gold and silver will rise. Physical metal will become scarce. People who positioned early will be protected. People who waited will pay the price. Now let me address something you might be thinking. Maybe this gets resolved. Maybe Powell gets cleared. Maybe the new Fed chair restores credibility. Maybe the dollar stabilizes and everything goes back to normal. Could that happen? Sure, anything's possible. But ask yourself, what's the downside of being wrong if you prepare for currency crisis? If you buy physical gold and silver, and I'm wrong, and the Fed magically regains credibility, and the dollar strengthens, you're holding an asset that has preserved wealth for 5,000 years. You haven't lost anything. Your wealth is stored in a different form. But it's still wealth. But if you don't prepare, and I'm right, and the dollar crisis accelerates and the Fed loses what little credibility it has left, you could lose half your purchasing power or more in a matter of years. That's an asymmetric bet. Limited downside if you're wrong, catastrophic downside if you don't prepare, and the crisis unfolds. In that situation, buying physical metal is insurance, and right now, that insurance is still available at prices that could look like a gift a year from now. I've laid out the facts. First, criminal investigation of a sitting Fed chair in 110 years. Dollar at 4-year lows. Gold and silver at all-time highs. International central banks expressing concern. Bond market pricing in loss of Fed independence. Currency system showing signs of stress that match historical crisis patterns. You can take action or you can wait and hope. But understand that waiting is also a decision. It's a decision to keep your wealth in a system that's showing clear signs of breaking. It's a decision to trust institutions that are under criminal investigation. It's a decision to believe that somehow this time will be different from every other time in history when these patterns emerged. I don't think this time is different. I think the fundamentals are clear. The trajectory is obvious. And the time to protect yourself is now while you still can at reasonable prices. Physical gold and silver aren't just investments, they're survival tools for your wealth. In an era when trust in institutions is collapsing and currency systems are showing stress fractures. Before I wrap up, make sure you're subscribed to this channel because we're going to be tracking this Fed situation very closely. Every development in the Powell investigation, every move in the dollar, every spike in gold and silver prices. We'll be covering it. Hit that subscribe button and turn on notifications so you don't miss these critical updates. Leave me a comment below. Tell me what you think about the Fed investigation. Do you think Powell gets indicted? Do you think the dollar loses reserve status? Have you already moved into physical gold and silver? Or are you still deciding? I want to hear from you because this community is how we stay informed and ahead of the curve. Look, I'm not here to tell you what to do with your money. That's your decision alone. But I am here to show you what's happening, that the mainstream financial media isn't talking about or is downplaying. They're treating the Powell investigation like a political sideshow. It's not. It's the most significant threat to dollar credibility in 50 years. When your currency is backed only by trust in an institution, and that institution's leader is facing criminal investigation, you have a currency problem. When international central banks start dumping your currency for gold, you have a credibility problem. When safe haven assets hit all-time highs while your currency hits multi-year lows, you have a crisis. The question isn't whether something is wrong. The markets have already answered that question. With gold at $5,136 and silver at $117. The question is whether you're going to position yourself accordingly, or wait until everyone else figures it out and metal becomes unavailable at any reasonable price. This is your warning. The Fed is under criminal investigation. The dollar is losing credibility. Gold and silver are telling you where smart money is going. You can act on that information or you can ignore it. But you can't say you weren't told. Thanks for watching. Subscribe, comment, and I'll see you in the next one where we'll continue tracking this historic crisis as it unfolds.